Greetings, fellow investors. Welcome to the Financial Podcast. My name is
And my
Lucas.
name is Markus, and today we're going to discuss dollar cost averaging.
So, dollar cost averaging, a very simple technique that entails investing a fixed amount of money in the same fund or stock at regular intervals over a long period of time. And this is basically done to counteract the need or want to try to time the market, which you might know from things we've talked about earlier is extremely difficult,
And not to be
if not
recommended, especially
yeah,
when when you are starting out.
yeah, and even experts say that essentially no one can really time the market because it's always very difficult to know what happens tomorrow.
hmm
So for those of you living in the States, if you already have a 401k retirement plan, then this strategy is already being,
Applied to it.
yeah. The basic idea here is that, well, it couldn't be simpler actually. You just invest the same amount of money in the same stock or mutual fund or maybe even index fund at regular intervals. The one most often used, I would say, is monthly. That's the one I've heard the most. And you completely disregard fluctuations, what you think the stock market is doing at the moment. So even if it's up really high, you still buy that month, but you don't buy a certain amount of stocks, you only invest a certain amount of money, meaning that if it's up a lot, you're naturally going to buy less shares that month. And then again, if it's down a certain month, because you invest the same amount of money, you're going to naturally buy more shares when it's down naturally without trying to time anything. Makes sense so far, Marcus?
Yeah, I think so. This is basically like most banks have some kind of savings plan. The bank I use have a saving plan, and this sounds very
Mm.
similar to what they recommend. That you should have a certain amount that you invest into, well, their funds each month, and you should keep this up for a very long amount of time. You should never really consider how the stock market is doing or anything. You basically automate everything, automate your savings.
Yeah.
So it sounds something similar.
Uh, this is also the reason why I got into investing or how I got into investing that I wanted to set up this system on Nordnet and just contribute each month into index funds. And this is something my girlfriend's dad actually set up for her a few years back, and I think it's been a really good system based on what I've seen.
hmm Yeah, they can. It's definitely a good way if you're not that much into investing to like automate part of it, and
Mm.
you can kind of set it and forget it because you're contributing the same amount each month. So all you really got to do is make sure you have that cash available so you
Mm.
can transfer the money. So yeah, I can definitely see the appeal of it. But I would like to add that sometimes they also suggest this strategy for stocks, and I'm not entirely sure I would always recommend it for stocks because one thing, at least that the sources I looked at didn't mention, is that stock companies can actually go bust, and if in case you have invested a
Mm.
lot of money into the same company over the years and then it go bust, then you have kind of not spread your risks. So
Mm.
if you are using this strategy for individual stocks, I think you should make very sure that it's well diversified, and you should probably invest
Mm.
into a large amount of companies and not just the same one all the time. Or you should be damn sure that this company is not gonna go bust.
Yeah, and another problem with using this strategy for individual stocks, like, correct me if I'm wrong, but you can't buy like half a stock. You always have to
Yeah,
buy the
you
whole
have to buy
stock,
the whole
right?
stock.
And yeah, and as you just said, you want to be really sure that these companies are strong and will continue
hmm
growing. And usually big companies like that or companies you can really trust, the individual stock value is quite big. So for you to be able to diversify properly as you want is going to be really
Yeah, you'd
difficult
need a
if you
huge
need to buy
amount.
like 10 different shares and then maybe just one share alone is worth 1,000 or over 100
Yeah, dollars or
euros.
euros.
So it's not applicable, as you said, to when you're buying
Mm.
shares. This is more of a long-term approach when you're investing in funds.
Yeah,
I
mostly. I
would
mean,
definitely
you
say
can you
because
can
it's
definitely use it for stocks also, but one other problem I quickly want to mention is that if you are using this strategy for stocks, you should also consider the fees that are going to incur if you buy into several different companies and you're always
mm,
buying. each month, you're going to contribute a lot to just fees over a fixed period of
Yeah,
time, which usually actually when you set these kinds of accounts or funds up in banks, they usually tend to not really take any fees from the actual transaction itself. It's more like a yearly fee or something like that, and it's a percentual fee of all that you have invested into the fund. It's like a service fee for like the fund, which is
yeah,
usually,
yeah, for
yeah, and
keeping it
it's
up.
usually
Yeah.
pretty low. I mean, it's going to be high if you have a lot of money invested into the fund, but then you have a lot of money invested into the fund, so you should be fine, I think.
So that's some of the limitations with this investment
Mm,
strategy. But let's take a closer look at all of the positives because there's a
mm,
ton, especially considering how simple it is. I mean, all you have to do is take a passive long-term approach to investing, and you're probably going to be off gold then in 10 or 15, 20
mm,
years. The real great thing with this is because over time, when you invest the same amount each month, and by the way, you can increase this amount as time goes on. Say you start with 50 or 15 euros as low as you can do on Nordnet, and you increase it to 50, 100. You can do that over time as your income increases. Since over time, when you invest the same amount each month, roughly, as I said earlier, whenever times are good or the stock market is up, you're going to buy less naturally. And then when stock markets are down, you're going to buy more naturally because you're just going to get more bang from your for your buck. This means that over time the average cost per share that you spend will be on the lower side since whenever the price is low you naturally buy more just by how the system works. Does that make sense to you,
yeah,
Marcus,
yeah,
the way
yeah.
I explained
It's
that?
That's usually how it goes.
Okay, just this naturally ensures that buy more whenever it's cheap.
Still very useful
This,
because a lot of people, like right now, we're going to talk about the corona rate related issues again, but right now a lot of people
mm,
are buying a large amount of stocks because they think they are, so to speak, on sale because of the recession that is going on and is sure to come in the future as well. But this might be a bad strategy compared to the dollar cost averaging instead, because then you would limit your risks, so to speak, because the temptation is that when stocks are down like they are right now,
mm,
the temptation is that, oh, I see a great trade here, I see a great trade here, and then you overspend, so to speak, that you have set your, you don't really have a fixed limit, so
yeah.
you just tend to spend money as long as
Mm,
they're good deals. But this might be very risky because you might spread yourself too thin, so to speak. Meanwhile, if you use this
mm,
strategy, you're going to limit your risks and make sure that you don't put too much money into good deals, so to speak. That you limit them to.
mm.
I mean, you might still lose some money if like companies goes bust or something, but you're limiting yourself, which might be a good thing. Certainly in these uncertain.
Yeah, and another thing with that is also that if the market gets
Mm,
worse, it's just gonna end up
buying you even more.
generating you more, yeah, generating you more shares each month at an even better
Mm,
price. But if you, so to say, jump the gun as you said, and you get too excited and you're sure that it's not, this is as bad as it's gonna get, and it gets even worse, then you're in really big trouble,
mm,
especially if you've overspent.
mm-hmm,
But if you've already planned this amount and you put it a bit on the smaller side so you're sure you can fit this into your monthly
mm-hmm,
budget, it's just a really safe way to invest because this is money that you're not counting on using anyway, so it just goes in there and it grows over time, which is I think a really great way to put this system in use
mm-hmm.
so that you can use this, as you said, set and forget mentality
Yeah.
with it.
Yeah, but you could, I can see actually how you could use this for stocks in a way. I mean, I kind of use it already because I have a fixed amount
Hmm.
each month that I'm putting into stocks. And it's around, currently
Mm.
I only have around 50 euros or sometimes above if I see a great deal, which might not be the best thing,
Mm.
but still. But I usually use 50 euros each month. I try to put in some stocks that I think looks really interesting and that I think could grow over time. I usually don't invest into anything though without making some research. So I'm not just picking, oh, this looks good, and then I'm picking it. I usually look at some historical data and at the company itself, what they are
Mm.
doing, and I try to project a little bit myself. For right now, I can't really talk about the results because we'll see. But so far, I think I've done fairly well A lot of the companies that I have bought into are actually recovering a bit. Some are not so much, but we'll see in the long run because I'm investing for a long period. So hopefully they will generate more returns in the future. But if I just choose this 50 euros each month, I can slowly grow my position and not have this mentality where I get to spend as much as I want each month on good deals. So I think this strategy definitely
Yeah.
could be used in shares, just not for individual shares, so to speak. You really have to spread your risks because I usually don't buy into the same company each month.
Yeah. Don't put all your eggs in one
Yeah.
basket. So to quickly summarize dollar cost averaging, you basically invest the same amount each month into a given portfolio, and this will ensure that over time you generate a really favorable average cost per share, since when markets are up you buy less and when markets are down you naturally buy more. And for me personally, if I start out what I think about
Mm.
this strategy, I think it's a fantastic way to start out when you're a beginner. This is how I've started out myself, and it's worked so far. I guess it's a bit too early to say because I'm like 2 months into this process. I feel really good about myself since this is a strategy that has been recommended to me by a lot of other experts. And there's really no way to, as long as you use this strategy, to make a mistake with the strategy itself. I sleep sounder at nights knowing that at least I'm not doing any mistakes. If things don't go well now, it's not my
Mm.
fault, basically. So, okay, maybe that's a dumb way to think
Uh,
about it, but it's just like since it's such a simple strategy, it's also easy to execute on. That's my point.
mm.
What do you think,
Yeah, I
Marcus?
think that basically all new investors should use this strategy in some way because I'm personally not
Hmm.
using it too much with index funds myself or mutual funds, but I'm definitely going to set the system
Hmm.
up shortly because yes, I can definitely see the advantages of this. Right now I've been more into stocks though, but I still use this strategy like I said earlier in the video because I use the fixed amount of money that I get to invest each month into stocks instead. I usually go a little bit over budget, but not too much. I keep to a certain, like a 50 euros a month. This is what I get to invest. Try to make a few sound judgments, and that's worked fairly well for me so far because I'm also so new that I want to limit my spending and limit my risks because basically I'm just trying to figure things out. I'm not trying to make massive profits because then you would need volume and invest a lot when you're buying shares.
Mm.
But since I'm just figuring
Mm.
things out, I know I'm not going to make a huge amount of profits. But if I even make profits, that's enough for me right now because I'm just trying to figure things out, see how things
Yeah.
works, what doesn't. So I think the strategy works very well with that because you really limit your risks and how much you are spending and how much you can potentially lose.
Mm.
But yeah, that's my thought on it.
Yeah.
Every new investor.
Yeah. So you're thinking of it as an sort of more like a budget
Yeah,
budget strategy,
yeah.
that to not get carried away and make all your mistakes at once and lose all your money, you sort of budget how much you can invest,
Mm,
even if it's riskier investments.
yeah, because it carries
Yeah.
very well with our rule that don't overinvest, don't lose more than
Oh,
you can
just
afford.
yeah.
And if you're doing this, you make
Mm.
sure that you're not going to do that because you have a budget and you
Yeah.
stick to it. So
Yeah, I think that's a really good point. It's a bit different to I guess how the author of the method
things about it,
thought
yeah.
it should be used. Yeah, but it's a really good point that's how one way you can use this, that you use it more of a way to budget your investments.
Hmm.
But I think overall that's a great mindset to have, that you're mostly focusing of if you can get profits and if you can get your different transactions to be favorable for you, because it's a difficult game and you should be careful in the beginning what you do.
So you don't, because you're probably going to make your biggest mistakes in the beginning. So try to keep them
Hmm.
low impact, so to speak.
Yeah, I think that's about it. And if you've stuck with us this far, we really appreciate it. Thank you so much. If you found this method interesting and you wonder how could I implement this myself, I would highly recommend that you check out our video on index funds, because there we cover much in more detail how you can invest in index funds and why you probably should invest in index funds
Mm.
if you are a beginner. And you together, index funds together with this strategy, it's a great combo. You're going to do great if you just implement those two
Yeah, so
things
definitely
in
go
your
check
investment
out that
portfolio.
video.
And if you found any of this helpful, please leave a like. And Any questions, I always answer them in the comments, so just leave them there, and we'll see you on the next week's
Yeah.
video.
Happy investing.
Happy investing!